Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Liquidity is vanishing from the digital asset class as the European Central Bank accelerates its balance sheet contraction. The ECB's €51.75 billion bond runoff is actively draining capital pools that previously supported riskier assets. This tightening of euro area credit conditions is pushing yields higher and forcing a recalibration of risk premiums. Bitcoin is trading at $64,094, reflecting this macro headwind. The correlation between traditional fixed-income liquidity and crypto valuation is becoming undeniable. As central banks withdraw support, speculative capital retreats. Meanwhile, geopolitical tensions are reshaping supply chains in the semiconductor sector. Apple is facing significant opposition from Micron regarding its lobbying efforts to source memory chips from China. Micron argues that such moves would curb soaring costs and protect domestic manufacturing interests. Despite the political friction, Apple shares rose 3.5% to $333.02. The market is pricing in resilience, but the underlying supply chain risks remain acute. This standoff highlights the growing divergence between corporate lobbying strategies and national security priorities. On the macro front, currency markets are experiencing historic volatility. The Japanese yen has plunged to 164 against the dollar, marking its weakest level since 1986. This depreciation is not isolated, it reflects a broader shift in economic power. China's economic rise is challenging Japan's export dominance, exacerbated by rising debt levels in Tokyo. The widening GDP gap between the two nations is forcing investors to rethink long-term currency positions. The yen's collapse signals a loss of confidence in Japan's monetary policy framework. In related news, regulatory crackdowns are intensifying in unexpected corners of the crypto ecosystem. Pyongyang has arrested a former state hacker ring accused of stealing from state banks and laundering funds via cryptocurrency. This rare internal crackdown on cybercrime suggests that even authoritarian regimes are struggling to contain the financial chaos generated by digital assets. The move underscores the global pressure on illicit crypto flows. Looking ahead to regional economic data, growth is slowing in key Chinese provinces. Xinjiang's H1 2026 GDP grew just 3.7% to 1.03 trillion yuan. This figure trails national averages and signals regional economic deceleration. While agricultural stability remains a factor, the broader trend points to weakening industrial demand. Investors are closely watching these regional indicators for clues about China's overall economic health. With no major high-impact economic calendar releases in the next 36 hours, markets are digesting these structural shifts. The absence of data releases allows the narrative to be driven by geopolitical and liquidity factors rather than statistical surprises. Traders are positioning for continued volatility in both crypto and currency markets. The interplay between ECB policy, US-China tech tensions, and Asian economic slowdowns creates a complex landscape. That's your market briefing. Follow Rumour with AI for daily market intelligence.